Good morning. This is Larry McMillan with the stock market update on Monday, August 22nd. The market has started to take on a more negative tone. Not outright bearish necessarily yet, but it has failed at the downtrend line, just above 4,300, the trend line that defines this bear market in terms of the S&P 500 index chart. Also, the declining 200-day moving average of SPX is in that same area. So when SPX challenged that area a couple of times last week, it failed and now is falling back. So we now are getting some sell signals, and if the market falls below 4170, that would be somewhat negative. If it falls below 4070, that would be outright negative. We'd probably be off to a new leg of the bear market if that occurred. We did have a classic, what we call modified Bollinger Band sell signal on Friday. We don't trade those. We wait for them to develop into a full-fledged McMillan volatility band sell signal. That would occur today if SPX trades below 4205. Meanwhile, the equity-only put-call ratios did curl upwards on Friday, meaning there was some heavy put buying accompanying that sell-off. But the ratios remain on buy signals. The computer analysis programs that we use to analyze those charts still is saying that they're on a buy signal. Breadth, however, suffered two very negative days, last Wednesday and Friday, and that was enough to roll the breadth oscillators over to sell signals. So that's a negative development that we haven't seen in a while. The most recent oscillator buy signals came in late June, and they proved to be quite good. So it's a bit worrisome for the market to see these breadth oscillators roll over to sell signals now, especially after the stock's only breadth oscillator made a new all-time high just a week ago. New highs versus new lows, that continues to be a bearish indicator. New highs have just not gotten off the mat. Meanwhile, VIX is up this morning, but last week it really wasn't up that much. So at this point in time, the trend of VIX is still downward, and that represents a bullish intermediate term signal for the market. If VIX were to close above its 200-day moving average, that would be above 2450. That would be a negative development, but it's got a ways to go from here. That's just barely above 23 right now. Meanwhile, the construct of volatility derivatives remains modestly positive for stocks as it has been for some time. So the bottom line is we're maintaining a core bearish position because of that trend line of the SPX is still in place. But we are trading these various indicator signals around that. They have been bullish signals leading up to, now. But now we're seeing the possibility of a couple of sell signals developing in the near future. Meanwhile, I invite you to visit our website where you can check out our daily newsletters where we keep up to these things, I won't say by the minute, but by the day. Meanwhile, have a great week trading.